Hello and welcome to another Smaulgld live stream. Excuse me. Today is June 22nd, 2018, and the title of... Wait a minute. What is going on? Shut the stream. Hello and welcome to another Smaulgld live stream. Today is June 22nd, 2018. Today we're going to be talking about crypto getting smashed, gold and silver flat, and excuse me, are alternative assets doomed? First, let's take a look at what happened during the week and during the day. So during the week, gold and silver fell a bit, not too much. They were up today, but they fell over the week. Gold closed last week at 1278 and then closed this week at 1268. Silver closed last week at 1654 and closed this week at 1642. So both gold and silver essentially flat but down. Big story in price movement, however, was in the cryptocurrencies. It fell about 15-20%. Bitcoin slid well over 10% today. At one point was down below 6,000. Ethereum was down to about 400, was down about 12-15%. Bcash was down 16-17%. EOS was down about 18%. Litecoin fell about 16%. So the question is, are these alternative assets in trouble? Now, one of the things I noticed a few years back, and I was concerned about it, was that the cryptocurrencies might take away some of the investment dollars from gold and silver. And clearly they probably did in 2017, but I would say by then the damage was already done, because the gold and silver retail sales in the United States, Canada, Europe pretty much started to fall in right after Brexit. I'd say in mid-May, June 2016. The crypto craze didn't really get going until the summer of 2017. Yes, there were people that were excited about cryptocurrencies. There were people who thought it was digital gold. It was better than gold. It was the 21st century and so on. But I don't think those people took away from the investable gold and silver demand that much. They may have done so in 2017. Now, the issue is those people that moved into cryptocurrencies towards the end of last year and are now sitting on 60, 70, 80% losses, obviously they don't have the money to be moving back into gold and silver. They've probably lost a decent portion of their money. But the gold and silver demand has been, as I mentioned, since 2016, extremely low. Now, I find it interesting that I see online, at least, on the silver channels and the gold channels, people very optimistic about gold, saying they're buying, they're stacking, but I don't see the sales on the US Mint site, and so I don't know where they're buying, if they are indeed buying, because the sales have been abysmal. This year, again, so far, or this month again, the Silver Eagle sales are now at 340,000. Last month they were 280,000. We used to have months where the U.S. Mint sold 3, 4, 5 million American Silver Eagles in a month. So we're down nearly 90%. Same with the gold. In March this year, 2,500 1-ounce American Gold Eagles sold. Nothing. No half ounce, no quarter ounces sold that month. April, 4,000 American Gold Eagles sold. May wasn't bad, 18,500. So far in June, 11,000. Now, as I mentioned, some of that, quote, gold demand is moving into ETFs. So that brings us back to our discussion point on the digital world. So you would think that in the digital world, then these cryptocurrencies would be doing well. But the problem with the cryptocurrencies, they have a dilemma. The purpose and the big promise of cryptocurrencies is that somehow they're going to be used as a medium of exchange, and therefore everyone's going to want them, need them, use them as a medium of exchange. But that's not what we're seeing happening. The reason for the price run-up in 2017 was essentially a lot of people wanting to buy it for the speculative value. And they saw it going up, and for the reason it went up, they bought it. And now for the reason that it's going down, they're selling it. So cryptocurrencies have an issue if that they don't meet their promise as a currency, and you just hoard them, and they're not used. You might as well just be hoarding pieces of paper or any digits. And that truly is what the issue is with cryptocurrencies, because you can say there's the technology, there's the Lightning Network, all these things can be done, but until people feel a need to actually exchange their fiat currencies for cryptocurrencies because they have superior utility and they are used and they can also act as a store. But what's happening now is people are buying the cryptocurrencies, holding on to them, never testing the utility of them, in part because there's not a lot of places to test the utility because they can't be used any place. But the other part of the dilemma is if people did start using the cryptocurrencies and spending them, they would in a sense be selling them, which would not be good for the price of cryptocurrencies. Also, the difference between the reason I've never believed that Bitcoin was digital gold was there's no need for Bitcoin on its own. Its only use is if it is part of a network and it can be spent. The reason gold became money was because people desired it for itself. The only reason people desire Bitcoin for itself is because they think it's going to go up. But it actually becomes anti-gold and anti-store value when it goes down because, in a sense, more people don't want it, and therefore the price goes down. So gold has an anchor that Bitcoin doesn't. Bitcoin is reliant on mining. Forget the regulatory circumstance. Just assume that people can do what they want with Bitcoin. There's nothing to do with it unless it's part of a system and unless it is accepted and spent. Whereas you can hold gold and silver and you can never spend it. And this is why I also say gold and silver right now aren't money because they don't meet the medium of exchange requirement. They need it, but they're also not used. However, they can still have value in that people can hold them, collect them, forge them into jewelry, medallions, whatever they want, or just hold on to it. There's really nothing to hold on to with Bitcoin. So I think that these alternative assets, while they can have a very bright future, those are the things I think that are holding them back. I think the fact that the gold and silver community and the crypto community have like a Venn diagram, there's some that really hate gold and there's some that really hate cryptos. And then there's some that are ambivalent about one or the other. And there's a crossover at some point where there are people that are alternative asset investors and they buy both crypto and gold and silver. Excuse me. And then there's also the promise of marrying the two with a digitized, putting gold on the blockchain, silver on the blockchain. Now that's up for debate because that in a sense is really just changing the dynamic of having silver certificates issued, except they're issued on the blockchain. So there's a bit of a difference there. Also, the crypto purists will say that you're better off not having something of value attached to a cryptocurrency because therefore the fraud can't be committed against you. You can, if you have just the Bitcoin, no one can take it from you. They can steal it from you, but they can't dilute the value of the Bitcoin. It's immutable in that sense, as that is your Bitcoin. You have the private keys to it. Whereas if you have gold on the blockchain, you may have a token that says you have 12 ounces, 3 ounces, whatever you have, but you may not have that. So there's the upside, they say, to not having a cryptocurrency backed is there's nothing to take. So that's counterintuitive. That's like saying my imaginary friends are better than real friends because they agree with everything I say, but they're not real. And so there's nothing backing a Bitcoin, and somehow that bug becomes a feature. So in any event, I'm looking at this and I'm seeing that both gold and silver are having difficulty moving up. And I think that is in part, I think it's in part two things. You always have to just assume manipulation, but you have to assume that in all markets. And you have to assume in the markets that the central banks like, it's going to be manipulated higher. And the markets, for whatever reason they might have to dislike a market, they're going to manipulate it lower. Now, there's times when it's advantageous for central banks to drop certain markets lower, but it's rarely, or higher or lower, but it's rarely ever advantageous for a bank to manipulate the price of gold higher. Other than, in the old days, what they used to want to do, it's what Roosevelt did after he confiscated gold, is to create inflation. You basically boost the price of gold artificially, and then the value of your currency goes down, and voila, you have inflation. But I don't see that happening. I don't see, they think they can make their inflation, not that that's a desirable goal, but they think it's a desirable goal. You can create your inflation just by printing the currency. You don't have to revalue gold. And also, gold isn't as prevalent throughout the monetary system as it was back in 1933. So they were able to manage to get their inflation by taking the price of gold from $20.67 an ounce to $35 an ounce. And then they left it there for the longest period of time. The other thing I want to mention from last night, we talked about the Russian gold holdings. And I want to give you some context to what I was saying, a little further context. I was saying it wasn't a big deal. And I gave you the numbers that they had brought in 600,000 ounces in May. That was 18.666 tons. They've been doing it every month. I've been tracking it since 2013 monthly. They brought in so far this year about 90 tons into the central bank, 224 tons last year, 199 tons in 2017. They brought in 206 tons, I think, or 208 tons in 2016. So the last 3 years, they've averaged well over 2015. They averaged 208, 199, and 224 tons. This year, they'll probably do 200 tons. And I was mentioning how the annual gold mining production is about 2,500 tons. So they're not even taking 10% off of that top. And Russia itself produces about 300 of those tons. So they're basically just buying their own supply. But I want to give you some other numbers to show you that these numbers are more impactful on the gold market than Russia. People, they hear the word Russia, they hear de-dollarization, they hear dumping treasuries. They think that's the golden ticket. And as I mentioned, it's just what Russia needs to do. It's a prudent thing to do, but it really doesn't have that. It has very little impact on the treasury market because they don't have that many treasuries to begin with. And right now, they only have 48.1 billion of them left. So that's half a month of QE. They really don't have that many treasuries. And I'm mentioning that their gold, even in the aggregate at 1,942 tons, is still not that big of a deal. It's 80 billion. But let me give you some other gold numbers. In 2017, the tiny country of Turkey imported 360 tons. Now, that didn't all go to the central bank of Turkey. That went into private hands and probably some government hands. But that's a larger number than what Russia brought in its record year, 2017, at 224 tons. If you look at India, I report on India basically monthly. India imported 901 tons of gold into the country. Again, none of that went to the Reserve Bank of India. The Reserve Bank of India, the Central Bank of India, has only 557 tons. So again, the lowly, or not lowly, but the small country of Turkey, lowly in the sense that it's not a large country, 360 tons of gold imported in a year. India, 901 tons. China, just through Hong Kong, and then China's secretive at whether it imports any more gold through Shanghai or other ports, but through Hong Kong, which is reported, 628 tons. So just between the Chinese imports, the Turkish imports, and the Indian imports, you do have a significant amount, because if you add up the 360, the 901, and the 628, you're looking at basically the entire amount that Russia has. That's about 1,900 tons in 1 year. Those three countries did in imports. That is the entire size of the Russian gold hoard, which is the 5th largest in the world. Even those two numbers are not even equal to the annual gold mining production, which is about 2,500 tons. So you have to keep all that in mind when you hear these numbers. That's why I report on them, but people constantly twist them, cherry pick them, take them out of context, talk about game changers, game over, de-dollarization, multipolar world, dumping treasuries, end of dollar hegemony. These are gold pumper phrases that they just spout whenever they mention Russia. Multipolar world, Russia's had enough bricks. Anyway, enough of that. We've been over that territory enough. I just want to give you the context with the others. But I will say that I think that pumping is very harmful, because all it does is, if you ever take somebody who knows nothing about gold or silver and you direct them to some of these sites and you direct them to some of these narratives that you hear and repeat, they walk away from and they say, these people are half nuts. When you see dollar to die in 2015 and then it doesn't happen and they're still talking about how it's going to happen, that is not a good sales pitch to someone who might otherwise be interested in precious metals, might otherwise be interested in buying physical gold or silver. That stuff appeals to that's the red meat for the faithful. But when those types of stories, sovereign size gold buy in 45 days, yes, we trust him, it's happening, that appears to the average person as somewhat lunacy and just pumping. So it's not that I point it out because I think it does far more harm than good. All right, let's get to some of the comments here that we see. All right. K. McDonald, how long can gold and silver be controlled? No one knows the answer to that, but the way I look at it is, I say, well, how do they control it? What are the means of control? And is it a free market they're trying to interfere with, or is it their own market, their own casino, with their own chips, and unlimited house money that they're playing with? And my answer in my own question is the latter. I believe that the COMEX, the LBMA, the Shanghai, whatever market you're on, government sanctioned, government regulated, central banks involvement, they run that game. They're running the table. They own the casino. You can't even bust them because they can print more chips. They can do whatever they want. They can kick off a player who's counting cards. So that's why I think the only way that they can be stopped, I suppose, or can stop the control of it is a couple of ways. One, people stop buying and trading off of that price. Now, I don't see why that wouldn't happen. It does happen from time to time. We have examples in rural India. They have different premiums. People pay what they need to pay. Think about it. The price of eggs differs from town to town, differs from city to city, state to state, all over the world. The price of gold is a national gold price, worldwide gold price. That's crazy. But how do they get away with that? It's because it's not a free market. It's not people bringing their wares into town and bringing their gold trinkets and bartering for what they might be worth. There's a fixed gold price. So I think that as long as they are running the table and running the casino, that they can control the price of gold. The only way the price, I think, breaks from that is if people begin to trade off exchange because they actually want the physical metal and they don't care what the price is and they're just willing to pay what they need to pay to get the metal. What they've done there is they've made people not want the metal. They've made people want to get these ETFs or whatever it is, or make them not want gold at all. So that's one way. The other way would be if the trading platforms, people lost confidence in them. I'm not talking about Turd Ferguson or me or you saying, oh, it's a scam, COMEX. Yeah, we may think that. But the people that matter, the ones that go there and put their money there, you and I don't trade COMEX futures. I mean, you'd have to have, I think you have to buy, I think it's 1,000, there's mini contract, COMEX silver mini contract. Anyway, you have to have significant money to buy a contract in the first place. But the people who buy those contracts, they have full confidence in the COMEX. They believe how it works. They're not worried whether they're going to be able to take delivery. Because if they wanted to take delivery, they would just go out and call a broker and buy gold and have it sent to their house or their warehouse or their client's house or a client's vault or whatever it is. So the people on COMEX are very satisfied with the way that thing operates. They know how it works. They're not there for the gold or silver. They're there for the exposure to price. They're there for the fiat profits that they can make from buying or selling. They probably don't even know much about gold or silver. They don't even care. To them, the COMEX works. So those are the two ways, is that people go off the exchange for either because they have to, because they want to get metals and the COMEX price doesn't reflect the price that they need to pay, or the traders just say this is nonsense and some other exchange comes up. But that's why I think that they can be controlled. They have been controlled since COMEX started, since the futures were started in gold and silver. There's really no need for gold and silver contracts. The reason for futures contracts, often when they first came up with them, the Chicago Board of Trade, was for farmers to be able to hedge their inventory. There's no need to hedge your gold or silver inventory, but that's neither here nor there. Let's get to the next question. K. McDonald, do you think it's the banks buying up all the cryptos? Well, I don't know who bought it, but I think who holds it initially probably wasn't the banks. It was probably a lot of the early adopters. I wouldn't rule out the banks buying them. And once you have futures, one of the unfortunate things about manipulation is you don't need much. You don't need to trade that much in order to make an impact on the price. You just have to do it successfully. So they can have decent amount of Bitcoin. They don't have to have 20, 30% of it or whatever cryptocurrency. As long as they can then trade their futures, for example, if they want the price to go down, they go into their physical stash, they sell on 6 big exchanges. They don't have to sell much, but they sell enough so the price goes down. They sell it to the point where they can cash in on their short position. They take the fiat profits, and maybe they buy at the low of that day or week of the Bitcoin. They accumulate more Bitcoin so they can play around with it, and then they want to run the price up. They do the same thing. They do a little buying with the money they made on their short, and then the price goes higher, and they make more fiat. They take that, they buy more Bitcoin, and you can see how the game is rigged, because when you're running the table, you can't really lose. So I think the futures are a bane on the Bitcoin price. Jeffrey Gotts, it's too early and the market cap of Bitcoin is too small to be used as currency. That's true. So a lot of the value of Bitcoin or any of the cryptocurrencies, not the ICOs, but let's say Monero, Zcash, Dash, Litecoin, the ones that are intended to be used as cryptocurrencies, they're there as the potential. You're holding that as potential, and the potential is not only can you store the value waiting for the time when they'll be used more widespread, but that they should go up against your fiat currency, and then the bonus is you'll be able to use them and spend them in more places. So yes, that is the value that people are ascribing to them. Oblivious oblivion. Not too early. Bitcoin has been around a long time. It's a matter of sufficient tools available. That's true too. Jeffrey Gotts. The problem with gold is that it's difficult to transact across the world. How do you move 1 million of gold easily? Well, you can, and they've done it for decades now. It's basically, if you have gold in storage, you don't have to physically go and get it, collect it, and then there's ways of moving that gold either physically from one destination from the other, and you sign notes that that's going to happen, and then people take the risk on delivery, or you have a common warehouse, and in that warehouse, this is a lot of times when they quote take delivery in COMEX, all they do is they move it from one portion of the warehouse to the other. So let's say JP Morgan Silver Vault, someone takes delivery, it'll just get moved over to their account in the vault. So it's not as difficult as you might imagine to move large amounts. It's not as instantaneous as, let's say, Bitcoin with the lower transaction fees, the less risk of theft. But when you're doing it within a vault, it's pretty simple. It's not that hard. You just change the sticker and who owns that little pallet of gold or silver. But that is an advantage of Bitcoin. But it has to be such an advantage, and there has to be so much need for that people are willing to use that instead of the SWIFT system, instead of credit cards, instead of wire transfers, and so on. So that's really where Bitcoin needs to step up its game is against the larger payment processors. And in theory, they do a better job. So does Litecoin. It's whether they scale and how many people are willing to use those payment systems. K. McDonald, what does cost in Hydro to mine Bitcoin now? Will mining stop when too expensive to mine? Well, there's always an economic disadvantage to mining at a price lower than production. But so far we haven't seen that, and it is expensive to mine Bitcoin, but also it's expensive depending on where you are. So like any free market, mining rigs can be set up and they can move to places like Iceland or Venezuela if they need to. I think Bitcoin mining is still going on in China, even though they've banned basically the exchanges and the trading. Oblivious oblivion. Bitcoin and such have served where normal currency hasn't worked, donating particular groups. That's right. So I think what's the guy Julian? So WikiLeaks. WikiLeaks accepts Bitcoin, Litecoin, and they started accepting it when it was really cheap. So they're probably sitting on a big stack. And Reddit takes it, didn't take it, and does take it. So yes, there is an alternative means of payment. People can use it for places where maybe they can't use cash or they don't want to use their credit card. So that is another advantage to cryptocurrencies. It's too early in the sense that Bitcoin is too small. That is correct. All right, let's see. Oblivious oblivion. That's right. 62 pounds isn't that hard to move. Yes, it's not instantaneous, but you can easily ship 62 pounds of gold or silver overseas. You can do it. You can. It's just more mechanical. As I mentioned, if you do it within a trusted vault, where it just gets moved from one place to the other, it can happen almost instantaneously. Yes, Jeffrey Gotts makes the point that you don't want to travel with 62 pounds worth of precious metals on the plane because they could take it from you. They could take anything from you when you get on the plane, and then they can claim that they don't trust where you got it. And even if you can tell them where you got it, they're going to hold on to it. So you'd have to work through a private courier. And again, the issue with transporting precious metals is you either get stopped by the TSA, you get robbed by a thief with a badge, or you get robbed by a thief without a badge, or it's just going to cost you a lot to transfer. So Bitcoin does solve that issue. So one way of transferring gold could be if you want to buy gold in one place and transfer from one place to the other, you you send the Bitcoin, convert the Bitcoin into cash or gold at the destination. You don't send the gold. That only works, of course, if there's gold at the destination. And oblivious to right, ship it commercially in a vault seems expensive. High anxiety. That's exactly what that would be. Your gold is flying away. Oblivion. Only way Bitcoin would get out of a too small category would be some giant problem with normal fiat. Yes, that's a problem I identified when I first looked at cryptocurrencies in 2013. I said, even if I get past the things that I don't like about it, why would I own it other than for it to go up? Because they said, well, you could buy coffee, you can do all these things with it. And I thought, I already can buy coffee. I already can go into a store and use cash or a credit card and buy a cup of coffee. I don't need to go out and buy Bitcoin so that I can go buy coffee. So I thought at the time, the only way that people would use Bitcoin is if there was some merchant incentive where they would give you a discount for using Bitcoin. So far, you don't see it. You do see on the precious metal sites, if you use a Bitcoin option and they're using BitPay or Coinbase, they will charge you less than they do for a credit card. So that might be a reason to go out and get Bitcoin so that you can buy something online or buy something in person that would cost you less than if you used a credit card. The issue there, though, is you're talking a very small percentage. And obviously, when you buy Bitcoin or Litecoin or whatever it is, you're going to have a potential percentage issue of the price moving after you buy it. And also, there's transaction fees. If you're not too savvy in buying it, you buy on Coinbase, you're going to pay more than the transaction fee that you're saving on the coffee. All right, Flight 19, silver 1964, $1.29. I don't know what that means. I know silver in 1964 was the last year. Here's a quick tidbit for you. 1964, everyone knows, not everyone knows, was the last year that coins that had 90% silver in them were minted. However, because Johnson was dead set on making sure that people were going to accept the new copper-clad coins when he took the silver out of the coins, he made sure that he kept printing 1964 dimes, quarters, and half dollars well into 1965. I've done a chart on this just so that he basically would show that there's so many of these things, there's no reason to hoard them, and in fact, he issued a threat. He said in one of his presidential orders that if will be no benefit in hoarding these coins. There's not many more than the others, and the U.S. Treasury has on hand millions of ounces of silver, and it will use them if necessary to drive down the price of silver. So don't go hoarding them. Well, people didn't listen to him; they did hoard them. But the point is, 1964. The trivia there is there were 1964 dated dimes, quarters, and half dollars minted in 1965. Jeffrey Goss, but this seems to be a great buying opportunity. For which? The cryptos? Well, both. This is my point. That's why I have our alternative assets doing. Right now, you're looking at especially cryptos and silver. Well, I'd say especially silver, because cryptos are still way up from last year. It's silver that's the one that's been beaten down for the longest time. Gold really hasn't been beaten down. I mean, it did make that spike in 2011, but it's still well ahead of its 2008, 2009, 2010 prices, whereas silver is not. Silver is still back in pre-crisis prices. It's actually at the same prices as it was in the 70s. It's the only asset I know of that's that low. And that's on an apples-to-apples basis, not on an apples plus inflationary basis. Remember, in 1979, if silver was $50 in 1980, that's worth a lot more than today, and silver is not even past $50 at that high in 2011. Yep, donating to political groups, buying Russian products, whatever it is. Yes, you can evade sanctions by using cryptocurrencies. People are very pessimistic right now, and you know what they say. That's what is that? Someone wrote it in the comments section about when to be greedy and when to be not greedy. I think it has something to do with when people are really pessimistic. That's when you're supposed to get greedy. And yes, Jeffrey Gotts points out Bitcoin has been through this many times before. I love when people they think they're showing me something, the bubble chart. But the Bitcoin charts have gone through that exact same run up to the top, despair, that classic chart that they show you. And most recently, it happened in 2013. Bitcoin went from a few dollars up to 1,000 and crashed down to $200-300. The same exact thing. Now, the question is this the evergreen bubble where it does this all the time? Or each time it happens, I think that's it. It's basically through. It's finished. But the longer it stays around, the more likely that's not true. Because a real bubble, once it collapses, it's gone forever. Never comes back. Bitcoin has come back from other disasters and gone even higher. Yep, some 90% drops. It's also hard to say what the value of an immutable ledger will be in the future. That's right. You don't know, and that's why it's speculative. That's why the price could be $150 a coin. It could be $150,000. Who knows? I haven't been paying attention, says Oblivion, to Bitcoin presently, but I guess the bad faith actions of Bitcoin Core are starting to affect the community. I don't think so. I think those are their own people. You got the Bitcoin Cash, the Bitcoin Core. You've got there's even an issue with Zcash, and they want to fork there. I think the issue is to the average investor. They see hacks on an exchange and they hear increasing regulation. The hacks on the exchange scares away the average investor, and then the regulation scares away the person who wants it to be deregulated. But I actually think that the regulation is going to help drive Bitcoin to make it mainstream, because the big money, so to speak, cannot invest in something that can either be hacked or doesn't have regulation. So eventually, I think you'll see a shift in the profile of people who own cryptocurrencies. And again, it'll move probably towards the institutional. If it takes off, it does take off. It'll be co-opted in a way by the banks and by the institutional investors, I believe, who will have all this regulation in place. That's not to say that you won't have off-block exchanges, you won't have decentralized exchanges. I think in this case, they'll benefit from the regulation being there, even though they may be using their Bitcoin in an unregulated way. Bitcoin had been fine, says Jeffrey Gotts. They did was technically, let's see. There's a little argument there between Oblivion and Jeffrey Gotts on the old debate on whether you increase the block size or not, which is what Bitcoin Cash wanted to do. Let's see, binary tree, no. Oh, we got a lot more comments here. I'm sorry, I missed them. I'm not going to get into the Bcash, Bitcoin, what's his name? The guy flipped the bird in the screen. What is his name? Roger Ver. We're not going to get into his thing. Okay. Scott Valdez, as long as they physically control it, and they physically control it currently. Yep. Right. Since interest rates, as Jeffrey Gotts, are manipulated, you don't have good price discovery. Well, that's the thing. It's not just that gold and silver is manipulated, as we mentioned last night. Interest rates are manipulated. That's out there, right out there in the open. And not only are they manipulated in general, it used to be that the central bank would manipulate interest rates to generally help the economy, to generally slow the economy. Now what central banks do is they manipulate interest rates and they interfere directly into markets, not just to generally help them, but to specifically help the stock market, specifically help particular stocks by buying them or doing futures around them. So that is a big issue. Because gold is an exchange, as Scott Valdez, the trading gold are actually trading paper and don't take delivery. And as we mentioned earlier, I don't know if you were on before, they don't want to take delivery. They're not there for delivery. So they don't care that there's not a potential. They don't worry about what if I want delivery, because they don't want it. And they also know that there are other traders there. They don't want it either. Until they change their tune or someone forces that default to have 100% control. I agree, but the thing, Scott, is there's rules in the COMEX that if someone tried to force a default and tried to harm the COMEX itself, they would boot that trader, they'd investigate that trader, they'd have prosecuted, thrown in jail, they'd have them investigated by the IRS. So you You cannot try a malicious act on the COMEX. It's protected by its own rules, and I'm sure it's protected by the government. So they run that casino. It's the same. I like to use the example of in casino where the two guys go in there and they count cards. Yeah, they can go in there and figure out how to beat the casino. The casino won't let you beat the casino. You don't beat the casino at the casino. So this idea is, to me, again, it's pumper nonsense. Someone has to break the market by taking delivery and forcing default. Never going to happen. No one's going to stand for delivery and it's game over. Not going to happen. They won't let it happen. And no one is stupid enough to even try it. You just lose your money. So that is not how the COMEX will go away. The way COMEX will go away is if people don't trade off of its price and trade elsewhere because they need to, there's a shortage and they actually need to pay the price. But then COMEX would just basically readjust its price and they would trade around that. So I don't expect there to be a default on the COMEX that would crush it because they run that casino. They're not going to let that thing go down. Rob Gibbs. Hello, Rob. What does the U.S. government treasury do with foreign dollars that were used to buy bonds or treasuries? How does that dollar conversion work? Do you have to buy dollars first? Normally, my understanding is that when a country buys treasuries, they're buying them with dollars because they usually acquire dollars through their trade surplus. So let's say they're doing international trade either with the United States or another country, and they receive dollars for their goods. They can hold those dollars in their account, but if they're going to hold them longer term, they generally flip them into treasuries. But I'm sure they have a foreign exchange facility too if people want to buy the bonds. Remember, they don't buy them directly from the treasury. This is the other scam. They have to buy them through authorized dealers, and guess who they are? Goldman Sachs, JP Morgan, and so on. So I'm sure they have ways of satisfying their customer demand in foreign. They will reverse and move it along when they can't milk more profit to the downside. That's true, Scott. At some point, they have to go long because there's your point. That if this is, you're making the same point I'm making, is that if the price got so low, but no one would sell physical at that price, then people would trade not off of the COMEX price, they trade off exchange and they would pay what they need to pay in order to get their metal if it was actually required. And COMEX would adjust pretty quickly if they found out people were doing that, and so then they would push it higher. That's right. Sat Valdez, Bitcoin needs broad adoption before transactional. Well, isn't it chicken egg there, Scott? I'd like to get your thoughts on that. Until the store of value function of money, don't spend. Just save the store of value. Spend fiat, save Bitcoin. Yes, that's what's happening. But if the price drops, that strategy doesn't work. In other words, if you're waiting for the broad adoption and you buy it and you hold it as a store of value, but it loses value, then the statement doesn't work because now you're holding it as a loss of store of value. Well, isn't the common warehouse the same as Bitcoin? Yes. Yes, but Bitcoin transaction on blockchain equals physical transfer, audit and assay and record keeping of transfer. Try that with gold. Right. That is the what they say, the brilliance and the genius of the creation of Bitcoin by Nakamoto. Who knows with gold? Even if gold is bought, I haven't assayed, so I'm sure my Bitcoin is the limited Bitcoin. I'm pretty sure my gold is gold. All right, K. McDonald. What does it cost on Hydra to mine a Bitcoin now? Didn't we have this question already? We did have that question. Okay. Hard to say what the costs are. Okay, he's asking the same question again. Let's see. Andrew. So how does like a coin like Monero fit in? Fit in where? I mean, Monero is a privacy coin. I'd imagine you can hold Monero the same way you hold Bitcoin with the same strategy and the same understanding that even fewer companies take Monero, but that you're going to hold it until broad adoption, or you actually might want to buy Monero as opposed to another coin, which might give Monero a premium, because you actually do want to do a transaction that's private. Oblivious oblivion. SegWit is a significant mutation with security implications. Now, we're not going to get into this discussion, but the idea is that people are not paying much attention to cryptocurrency is that the Bitcoin Cash people believe that that's not Bitcoin, that's just that's their fix to speed up the transaction versus the Bitcoin Cash solution, which just raised the size of the blocks. The idea behind the Lightning Network and SegWit is that you can speed up the transactions without increasing the block size. I was not confusing, but I was putting the two SegWit and Lightning together. They're not the same thing. Breaking the COMEX price would depend on sufficient physical demand, correct, which you are reporting isn't happening. That is my point. That's exactly my point. And when people just see central banks are buying gold hand over fist, they're not. What does that mean? They're not buying more than the supply. As I mentioned, Russia's buying gold hand over. They're not. It's big for them, but you have to know what 220 tons of gold means. And that's why tonight I opened a show and I gave you what Turkey imported, India imported, and China imported. Much bigger than what Russia bought. And even that isn't that much of a big deal. It's big, but it's not overwhelming. And then you see on the other side with supply, some Chilean mine shut down and it's 18% of Chilean production, and Chile is the second largest. So what? That doesn't mean end of the world, game over. Oblivious oblivion, even if Europe blew up, people in Europe would just use the dollar, not gold. Yes, we've seen that. And I know from talking to people overseas, this idea that they tell you there's going to be a rush to gold. Think about what happened when Brexit happened. There was a, quote, rush to gold that lasted about 14 hours. Then they smashed it down and people realized, oh, better not do that again. There was a rush to gold for Brexit. There was a rush to gold when Donald Trump got elected. Remember that? It was game over, off to the races. And then within hours, they flipped the switch and said, no, right, Trump's not going to be bad. Trump's not going to ruin the world, and we're going to need gold. Trump is great for the stock market. So people moved into equities and the like, and we saw a big stock market rise. So you have the same issue with Bitcoin. The advantage Bitcoin has is if people, quote, rush into Bitcoin, you know there isn't that much there. That's a fact. Whereas gold, they can satisfy the demand by ETFs. They can satisfy the demand or discourage the demand by smashing the price. So there's less controls over Bitcoin than there are over gold and silver. However, Bitcoin can be smashed too now by people who are hostile to it. They don't have to. They could be holding right now sufficient, not even significant, sufficient amounts to manipulate the price down, especially if they do it in tandem to the with the futures market. Now, Rod Panhard said there really wasn't a rush to gold when Trump was elected. Oh, yes, there was. You might not have remembered it. It happened in the middle of the night, but by the morning it was over. When it became clear, I'm going to pull it up right now. When it became clear that Trump was going to win or had a chance of winning, the markets collapsed. The Dow went down well over 1,000 points. The futures even went down in the morning, and then it rallied. I'm going to get the price of the price on Kitco right now. It was a blink of an eye, but it was the disaster that Trump had won. The markets had basically said, this is the worst thing. You better have gold because this lunatic has become president. No one expected it. It was the uncertainty too. No one expected him to become president. And Brexit, I remember watching that. I was up, and I remember when it looked like Brexit was going to win, and boom, there went the price higher. Let me get the price here now for 2016. Then it remembers the date of the election. I'm sure it was, let's see, I got the numbers here. All right, 2016 in November. It was early November. You'd have to look at an intra. Here we go. The intraday chart. You'd have to look at to see it. So I'm going to have to pull that up. The price went ballistic, and then it came right back down. It did not last. Let me pull up the chart here. Let's January 2016. I got to scroll down. This computer's slow. So gold in May of 2016 was 1220. Then it rose to 1320 in June. And then it popped to 1370 right at Brexit. Then it fell back down. Then it went all the way to 1310 in August. September it was up to 1350 and then back down to a low of about 1310. And then in October it opened at 1310. It had fallen all the way down to 1250 in October. And when Trump, that little moment when Trump when Trump got in, it didn't close much higher, but it went from about 1260, 1270, all the way up to 1320 or 13 something, and then it went straight back down. And by the end of the month, it was at 1180. So it spiked for a brief shining moment, and then the whole narrative changed, and they made it sound like you don't need gold anymore, and the price went right back down. But you're right. It was a larger, more sustained rise for gold and silver during Brexit. Herb Levin, the whole system is just a weaponized Ponzi scheme wrapped up in world money laundering casino for the oligarchs. That's a good way of putting it. Well, they run the table. That's how I say it. See, people like to say, well, the free market eventually takes over. That's assuming that those markets are free to begin with, that they're not infested or run by the central banks and their too big to fail banking cohorts and the governments that back them. Yeah, something we always fail to understand from Adam Smith's Wealth of Nations, capitalism, the nature of progress leads to monopolies and cartels. Yes, and capitalism, pure capitalism, can probably also break up those monopolies and cartels. What happens is you get government to try to do it, and then government starts to play favors as to how to break them up, whether to break them up. Right now, you have governments supporting monopolies, getting in bed with them, like Facebook and Google, and working with them because they serve their purposes. And if they do serve their purposes, they're not going to find any antitrust issues. So, yes, capitalism and actually, there's nothing wrong with a monopoly if it is not government granted. Here's what I mean. Let's say you make pizza, and you, through the dint of your effort and the way you make it and the way you have efficiencies in making it, it tastes better, it delivers faster, you've got loyalty programs, and you just basically have 90% of the pizza market in the United States, and you have a monopoly. There's nothing wrong with that. The problem is if you do what's called monopolization. You use your monopoly power, or the government protects your monopoly. That's what the problem is. But if everybody loves your pizza, there's nothing wrong with that. You could say the Beatles had a monopoly on the pop charts in 1964. So someone could knock them off. But if instead the reason the Beatles had a monopoly on the pop charts is because their manager, Brian Epstein, went around, this is not true, and bought off all of the radio stations and said only play Beatle records at the prime times, well, then that is monopolization. They're using their position, and they're not allowing competition to knock them off. It's a matter of pattern in nature. It occurs in the form of civilizations. That's true, but it is true. If you knock everything back down, it'll move right back up to the top that way. That's just nature. You get larger aggregations of power. All right. Well, I want to thank everyone for joining me. Unless there's any I missed one here. Rod Petter. After 9/11, gold went to 4,000 apparently for a few seconds. Then they shut it down. Everything wiped all records ever happened. That's possible. I mean, you would think that would have happened. No one knew what was going to happen there. In fact, I was overseas at the time. I had no idea what was going to happen, and I immediately just went to the airport. I said, I'm getting out of here. I don't want to be in Europe when World War III strikes. That's when you just react. Tricky guy. All the bitcoins ever could be purchased and stored in a thumb drive wallet and then lost. Well, that's definitely true. It's definitely harder to lose than gold. You hear these stories of the shipwrecks that were lost, at sea in 1857 and 17, whatever, during the the period of time when lots of gold was coming from the New World and Brazil and Mexico and being brought back to Spain, and a good portion of it getting sunk by pirates or just getting lost. And they're finding it today. I'll never forget the guy, Scottish guy, back in 2013. He lost his computer with his Bitcoin on it. He was walking around the dump. He's never going to find that. So that's true. You can lose your Bitcoin a lot easier. And that about does it. Okay, well, thank you very much for joining me tonight. If you enjoyed this report, please consider hitting the subscribe button, and also find your way over to this Smaulgld channel and take a look there and subscribe there as well. Thank you very much.